Hey, what's up, Silver Stackers? Thank you so much for being here. This is Silver Slayer. Folks, you are in for a treat today. I have an incredible video that I put together for you guys and gals. I'm so excited to share this with you. This is some crazy stuff. This guy is talking about how the gold to silver ratio is heading lower, but it's a setup like 1989 to 2003. Which is the fall of the Soviet Union being a global catalyst event just like COVID. And he goes in to say that the similarities seem too obvious to ignore. And in my opinion, it is blatantly obvious when you look at the similarities this guy put together. Let's look at the chart. Left-hand column, 1990 to 2003. Right-hand column, 2004 to 2022. SPY rallied almost 250%, peak in 2000. SPY rallied almost 600%, peak in 2021. Oil rallied over 200%, 1998 to 2003. Once again, oil rallied over 330%, 2004 to 2008. US dollar peaked in 2001 and 2002 near 120. US dollar peaked in 2022 near 110. Gold entered an extended sideways basing pattern between 1990 and 2002, which was 12 years, and then gold entered an extended sideways basing pattern between 2011 and 2022, which was 11 years. Crude oil broke lower as the dot-com bubble bursts, and then again, crude oil breaking downward as everything bubble is bursting, 2022. US dollar continued to rally until late 2002, before the Iraq war started, which was 2003. US dollar continues to rally as global conflicts escalate in Ukraine and Taiwan. Consumer sentiment shifted dramatically. Now we could keep going back and forth on that chart showing those similarities, but I wanna bring this all together and show the context of what he's saying this all means. Obviously, there's a lot of similarities. And actually the closest similarity that I've heard is the 2008 to 2011 situation, which led to $50 silver, comparing that to nowadays. The similarities being 2008 credit financial crisis, recession/depression, billion-dollar stimulus leads to $50 silver in 2011, that 3-year period. Nowadays, starting in 2020, credit financial crisis, recession/depression, trillion-dollar stimulus, and a global virus, which would lead to what? $50 silver? I mean, if that led to $50 silver back then, imagine what it could today, because $1 trillion is a much bigger number than $1 billion in stimulus. Plus, there wasn't a global situation happening on our hands. There wasn't a war. So just to look at this angle, 1989 to 2003, then 2004 to 2022, is just a whole different perspective. And I'm curious to see how he brings this into play. So, most importantly, let's talk silver. The link will be in the description. Traders are starting to realize inflation. CPI, PPI, and global currencies are reacting to the sudden policy shift by the US Fed and global central banks. This fear is showing up in the gold to silver ratio as well. Gold to silver ratio, obviously, when it's lowering, means that silver's outperforming gold, meaning that silver is performing better. He says that his research suggests the closest comparison to the current gold and silver setup may be found by looking to the early 2002-2003 US markets. Let's investigate this setup a bit further. Gold to silver ratio peaks above 1.2 during COVID crisis, meaning that it was above 100 to 1. We actually saw it 125 to 1 in March of 2020. Which was the highest it's ever been. But anyways, over the past 5 years, gold consolidated from 2017 through this event, the virus. This consolidation is prompting an extreme high in the gold to silver ratio, levels above 1 to 2 or 100 to 1. The only other time in history when the gold to silver ratio reached levels above that was in 1991 to 1992, this aligning with the fall of the Soviet Union. This extreme peak in the gold to silver ratio marks a very weak silver price compared to gold. Silver was $11 in March of 2020. And then gold in 2020 broke past $2,000. But psychologically, this represents a very real lack of fear related to global currencies and economies. The threat of extreme inflation trends. Now, as inflation suddenly became a topic near the end of 2021, the gold to silver ratio has moved decided downwards. And yes, if the ratio is 125 to 1, like you can see right here, 125 to 1, of course it's going to correct. We all knew that. We saw that coming. So, this illustrates silver is rallying compared to the price of gold as fears begin to elevate across the globe. Traders, consumers, and others are moving assets into precious metals near recent price lows to hedge against uncertainty, inflation, and currency devaluation. The fall of the Soviet Union was a global catalyst event just like COVID. The collapse of the Soviet Union prompted a global shift in how global currencies, threats, and opportunities were perceived. It also ushered in a new wave of capitalism throughout Russia that prompted a massive credit economic expansion phase aligned with the birth of the internet in the early 1990s. This is why we see gold price levels stay rather muted from 1989 through 2002, 2003. It was a time of very little fear when global traders chased deals, dot-com stocks, and real estate instead of precious metals. After the dot-com bubble burst and then 9/11 happened, that rattled global financial markets. Fear in precious metals suddenly came into focus again, right? You could see how anytime there's economic uncertainty, anything bad happening, people are going to swarm towards precious metals. That's why they're called safe haven metals. The rally that took place after 2001 in gold prompted a nearly 600% increase from $260 to $1,923. The biggest portion of this rally took place after the 2007-2008 global financial crisis. Hence, what I was just talking about, the main comparison is that I see. 2008 to 2011 led to $50 silver. Is today any different than in 2000, 2002 in reality? Then he shows this chart. This is the gold monthly chart, US dollar monthly chart, SPY monthly chart, crude oil monthly chart. And then he says right here, gold appears to be setting up very similar to 2002, 2003. So the similarities are too obvious to ignore. I already covered most of these, but I didn't go into the last 4 or 5. So consumer sentiment shifted dramatically after the dot-com and 9/11 crisis events disrupted expectations and the start of the war. That was previous, now 2004 to 2022. Consumer sentiment is shifting dramatically as COVID, inflation, wars, rising interest rates, and global economic issues ramp up. And then we have previously, the dot-com rally prompted an excess speculative investment phase throughout the world from 1993 to 2000. And then we have the post-GFC economic expansion phase prompted a technology, biotech, healthcare, crypto, and other excess speculative investment phase throughout the world from 2015 to 2021. And then we have the collapse of the Soviet Union in 1991 prompted a catalyst for a massive shift in global economic growth for 9 years, over 9 years. And then we have global financial crisis 2007-2008 prompted a catalyst for a massive shift in global economic growth for more than 11 years. So he says, I believe a continued decline in crude oil as well as a continued strengthening of the US dollar will likely take place throughout the end of 2022. In the meantime, gold attempts to climb back towards recent highs. The catalyst for the breakout rally in gold and silver will likely be some extended breakdown in the US global financial markets and stocks, or some new war aggression that pulls the US and Europe into a conflict. Overall, I believe global currencies will continue to recoil because of the risk devaluation factors related to inflation disruptions within the global economy, very similar to the end of the Soviet Union in 1991. My thinking is that gold will attempt to hold above $1,700 as a base support level, while silver attempts to hold above $19 as base support. Any major crisis event, war, global financial meltdown may prompt a retest of these base support levels within the next year. Yeah, and that's the thing is, and I'm glad he kind of threw that in there, is, the unknown variables are so have such a big impact, especially when you're throwing stuff out like this. You know, there's so many events he's trying to compare, but at the end of the day, right now, especially with what's going on with Ukraine and Russia and all this stuff, and more so even just the dollar, and I mean, there's so many different factors that weren't at play back then. We can try to compare and contrast and look at, you know, the charts historically, but at the end of the day, we're living in crazy times, so you have to expect the unexpected. If gold and silver are repeating a 2002 2003 setup, what can we expect in the future? Then the breakout trend starts in gold, which could happen as early as 2023, 2024. I believe the next rally target for gold will be somewhere above $3,100. Then we start a dedicated climb to levels above $4,500 and beyond. And if that happens, we would be seeing, you know, $200-$300 silver, and that's just if the ratio stays somewhat similar. It is difficult to predict any date targets for this type of rally, but I'm trying to illustrate what I see related to the similarities of the 1989-2003 market conditions and what I'm seeing right now. And by the way, that's just the $4,500 and beyond gold, or even the $3,100. Putting silver at a couple $100 compared to that level is being very modest, because that's just if silver moves with gold. But there are a lot of other reasons why silver would actually break apart from gold and could move regardless of what gold does, right? Regardless if gold's 4,500 or 500, silver could be doing, you know, its own thing and taking on a life of its own. So there's even more opportunity there just beyond silver following gold. So if gold rises, silver will rise, but also silver rising beyond that as well. So it's kind of a win-win situation. And that's because silver is a monetary metal and an industrial metal, where gold is only a monetary metal. I call it the best of both worlds. It can be a double-edged sword, though, at times. It is difficult to predict any date targets for this type of rally, but I'm trying to illustrate what I see related to the similarities of the 1989-2003 market conditions with what I'm seeing right now. If you were around to live through this incredibly exciting time, you may remember many of these events. I'm suggesting we may be starting to move through similar events right now, and I suspect we are somewhere near August 2000 right now. Wow, that's interesting. He even said the exact month and year he thinks we are in right now. That's a throw out there. That's really reaching, because I don't know. You already know what I'm going to say. You already know why I would say that's a big reach. But if he's being technical and literal, he has his reasons. But you can't be technical and literal in today's time. You can't just expect everything to fall into place. Now, yes, the similarities are too, you know, like he said, the similarities are too obvious to ignore, you know, but there's also a lot of other situations. Yes, history repeats itself, but to what extent? The markets are influenced by different things today than they were back in the day. You can't just say because XYZ equal, you can't just say because 1 + 1 = 2 back then that 1 + 1 will equal 2 today, because the entire equation, the entire formula has shifted. What affects silver to what degree back then is at a much different rate today. There's speculation nowadays. There's so many things. But regardless, I still think this is an incredible article, bringing these similarities to light, and he's probably going to be somewhat accurate in a lot of areas. What do you think, though? You know, screw my opinion. What is your opinion? What do you think about this? I brought this article to you. I brought this conversation to you, and I hope that you all in the comment section can throw your ideas around, your opinions, your 2 cents, your perspective. So yeah, hopefully this will be a good video. I was excited to show this to you guys, because man, what an article. Shout out to him. I'm gonna wrap this video up here. If you did like the video, then please like the video. If you think my channel is worthy of a subscription, if it's something you would like to see more of, I post daily videos, stuff like this all the time, every single day, bringing you the newest, latest, freshest, most up-to-date recent information in the world of precious metals, more specifically silver. Link to this article will be in the description. Thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.